which has the bigger read-through to you, Microsoft or Alphabet? And welcome, by the way. Good morning.
Thanks. Good morning. I think both are important read-throughs because, both companies represent so much of what FANG represents. Like you guys said, it's platform companies that really have a lot of exposure to a digital economy that's growing faster than the overall GDP, and that should be the case for the next 10 years. But, investors are finding them less shiny and attractive. That's one reason why we're seeing a sell-off in a name like Google. But as you guys mentioned, these have become so discounted that some of them will actually be included, we believe, in the value index in a rebalance. But more importantly, these are still going to be important EPS growers faster than the S&P, and they've underperformed now in the last 6 months by almost 10 percentage points, which is the worst since the dot-com bubble.
So, we talk about FANG a lot. Remember, the original FANG was Facebook, Amazon, Netflix, Google, now Alphabet. 3 of the 4 so far have had some disappointing results, right? Alphabet, less disappointing, relatively speaking. What does that say? And what do you think Amazon does in a season that so far, potentially 1 for 4?
Yeah, it highlights the risk reward is tough because especially in tech investing, there's that whole 3-quarter rule. When a company misses, it's pretty hard to buy for the next 2 quarters. So I think FANG is in that penalty box. But for long-term investors, these are, in our view, pretty great entry points, especially because if on a macro basis, if people are worried about growth, these companies are still going to grow double digits. Maybe not as fast as people thought, but still grow double digits.
So, Tom, when you say that FANG is acting like death, it's a little dramatic, right? Because they're not going to die anytime soon. These are strong businesses, but there is this divergence within the group. We'll call them mega caps, let's say. We've really seen, Netflix and Meta fall behind the rest of the crowd. So I wonder, where do you think the opportunity is here? Are they in a different category now, or do you think that there's actually value in these names?
I think there's genuine value because these companies generate so much free cash flow, and they have pretty big moats, as you guys would say, around their businesses. R&D is a huge component of their actual operating expense, and that's really what helps them extend their lead. And as you guys talk about, like some of the new leading edge things like AI, they're going to be at the front of this. So I don't think there's a lack of future growth catalysts, but because they're widely owned and people are more interested in owning inflation plays like energy or even some defensives, that's what's made them harder to sort of say they'll be great in the next month. But as you know, investing isn't really about trying to make money every month, but it is about trying to find sort of the big swings. And I think we're at a point where it's a big swing to own FANG.
So if the mega caps are in the gutter, what does that mean for some of those large but smaller tech names that are trying to make businesses and have made businesses in AI and automation, where FANG plays, but they've obviously seen their stock sell off hugely? Is there any opportunity in those second-tier names?
Yeah, those are going to be beta. The tech complex is derating right now, and I think it's also engulfing the venture and private world. So I think that's what's hitting a lot of hedge funds so hard, because there's a lot of marks coming. But as you know, ultimately, we're probably in a period of undershoot where investors' disappointment is now causing a derating that is the opportunity. But I don't know if we're, I don't know if this is going to turn here. But more importantly, it's, in 12 months, I just think these are all going to be great buys.
Looking ahead, Tom, we've got Qualcomm and ServiceNow after the bell, 2 big tech companies right around $100 billion and more than that, close to 150, 200 billion market cap. Semiconductors and software that's not in that mega cap cloud. We'll have Cristiano Amon from Qualcomm tomorrow on Squawk on the Street, and Bill McDermott from ServiceNow here on Tech Check tomorrow. What do they need to do? What do they need to show to perhaps show some of that potential that you're talking about for the market?
Yeah, it's a tough calculus, I think, right now in groups that haven't been acting well, and that's whether it's SaaS or semis or tech broadly. because people can always find a little bit of a hair or something to find a problem with. But it's, unfortunately, it's really maybe going to come down to technicals. It's really when stocks are so oversold that they actually trade up on bad news. Stocks don't bottom on good news, they bottom on bad news. So I think how investors react is going to be a lot more instructive to us.
All right. We'll be watching it. Tom Lee, thank you.
Thanks.